Hi friends, what you see on my screen is a massive bull run between March 20 and Jan 2022 in Nifty IT index. The Nifty IT index was trading at around 11,000 level during March 2020 and went up to crazy 39,000 level in less than 2 years of time. So in less than 2 years time, Nifty IT went up by almost 260%. A simple investment in just an IT index would have changed fortune of many investors. The point is that you don't need to be expert in picking individual stocks if you can understand sectoral dynamics. Having said that, after this massive bull run, what followed was the bear run, and as you can see on my screen here, within the next 6 months, Nifty IT index fell by almost 33%. Before I move ahead, quick note here is that no matter what asset you are holding and no matter how much of bull run you might have seen, bull run is always followed by a bear run. Of course, the timing of a bull run cannot be predicted, but always a bull run is followed by a bear run. After this healthy correction, the solid consolidation took place for the next 18 months, and you can see that IT index moved between 26,000 to 31,000 level for almost 18 months. And finally, the fourth leg of this index movement is what you see on my screen, which is the next mini bull run, which gave almost 40% return between November 23 and November 24. Within a years of time, IT index is up by almost 40%. So in summary, what did we witness here really? March 20 and January 2022, massive bull run for almost 260% gains. Then followed by a bear run between Jan 2022 and July 2022, almost 6 months of bear run. It dropped by almost 33% from the top, followed by a consolidation phase between July 2022, November 2023. It moved between 26,000 to 31,000 level almost. And then finally a mini bull run in November 2023 up to November 2024, where the IT index has moved by almost 40%. The reason I've given you this background about Nifty IT index is to show you a practical example of a cycle a sector follows, from a massive bull run to bear run, followed by a consolidation and again a bull run. Two important lessons as an investor we can draw from here very quickly. Number one is that don't do panic sell when you are seeing a bear run. Hold on to it. And secondly, volatility is part and parcel of equity investing. There is never going to be always a bull run or a bear run. It moves through a cycle. And if you're not comfortable with volatility, then equity investing is not for you. And with this, let me introduce myself. My name is Rahul Jain and I'm a full-time investor and full-time content creator. So far, if you're liking this video, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, if you want to practically learn about investing in equity market, mutual funds, ETF, etc., consider joining my YouTube member community. I post almost on a daily basis practically so that you can learn practically. The feedback from this community has been excellent. You can simply go to my channel and press on join button, or you will find the link in the description or in the pinned comments. With that, let me now move to the second part of this video, which is all about where is IT sector now going to move. Now, I'm not going to speculate about the future prospects of Indian IT sector. What I'm trying to do here is bring you insights from the leaders in this particular sector, because the sector is driven by the leaders operating in that particular sector. So for example, in Indian IT sector, if you look at the top 3 companies by market cap, it is number 1 TCS, number 2 is Infosys, number 3 is HCL Technologies. Now what is happening in these 3 companies pretty much sets the scene for the Indian IT sector. Again, please do not take any of these as stock recommendations. All I'm trying to do here is bring you insights from these 3 companies that will help you understand where is the sector actually moving towards. So have a look at my screen and you will see the last quarter's result that TCS published. And very quickly, you will note here that their earning per share in FY24 versus FY23, you compare, it is grown by 12.6%. Now, is 12.6% of earnings per share growth low or high or medium? You can make your own judgment, but in my view, I don't think IT industry is dying, which many people keep talking about, saying that they are not growing. Yes, from a revenue perspective, if you see their year-on-year growth for revenue in terms of the constant currency, which is if you compare the currency last year versus this year, has been around 3.4%. Yes, the growth in revenues is slowed down versus what it used to be maybe 4 or 5 years ago. But if you look at the recent quarter performance, it is picked up and it is gone to 5.5%. Overall, the EPS growth in my view looks healthy. Of course, it is not going to grow at 25% because the base that these companies have is huge, and growing at a faster rate on a huge base sometimes it's not possible. Okay, Rahul, this is the past result. What about the future outlook of this sector? So for that, have a look at my screen, and this is a very, very important concept that you need to understand about IT stocks or IT sector in general, which is the total contract value. What is a total contract value? Total contract value is total projects or contracts that a company has signed. So these are the confirmed projects that the company has signed in a particular quarter. So for example, here TCS, if you see the last 4 quarters total contract value, by the way, you're not going to find this data anywhere in their annual reports, etc. What I've done is I've gone through their con calls for the last 4 quarters and I've got these numbers, plotted this graph. And if you like that, hit the like button. Now coming back to this, if you see, that is very, very stable total contract value, which is almost $8.10 billion you see in Q3. So on an average, if you see, it is around $8 billion of total contract value that TCS has signed. Is it good? Is it bad? Again, I'll let you make the decision or assessment, because if I look at the last quarterly revenues the company did, it did around $7.67 billion of revenue in 1 quarter. So if their total contract value is higher than their total revenue in the last quarter, then I think it is likely to grow. This is what we can see here. And this is what the CEO has made as a comment in their quarterly earnings call, that they have been maintaining between $7 to $9 billion of total contract value, which they are very, very comfortable with in the absence of mega deals. So please understand, they have not had any mega deals because of a various number of reasons, but I'll come to that towards the end of this video. But more importantly, what their management is saying here is that their pipeline is strong across all geographies and industries. And he's also talking about the qualified pipeline versus the overall pipeline. So overall, if you see, the sentiments in IT right now from TCS perspective looks very, very good. Now let's have a look at Infosys. Where is their management going in terms of their thinking? Very, very quickly, you will note that their revenues have grown by around 3.1%. Again, not a huge growth here at all. But when they started this fiscal year, they were talking about 1 to 2% of growth rate. So it is done slightly better than what their initial projections or forecasts were. But more importantly, read the line number 5 here, that financial services in US, we are going to see better discretionary spend. It is picking up in their views, right? Overall deal pipelines remains strong. This is the word that their CEO Salil has made, and this is very, very important for us to understand. Finally, their utilization for IT companies, utilization is very, very important in terms of resources. So that is also improving. Overall, if you read this commentary, looks very, very good sentimentally to me. I also did exactly the same analysis in terms of the total contract value for Infosys. Also went through the last 4 con calls and found that their total contract value, if you look at the last 2 quarters, has come down. So there seems to be some pressure that Infosys is facing in terms of the total contract value. I do not know whether it is the lumpiness in their business or whether it's some other reason, but you see overall their contract value has come down slightly. Then let's also have a look at HCL Tech. So if you look at HCL Tech in the last 4 years, if you see, their EPS growth has been around 8.4%. So again, we are looking at single high digit growth rate in terms of the EPS, or in the cases of TCS, we saw around 12% of growth. So again, it is not 1 to 2% of growth rate in EPS. Important point to learn here is that revenue might be growing at 2 to 3%, but their EPS growth is much better. It is at 8.4%. And if you look at HCL's total contract value, that sets the scene for the future. If you look at, that is very, very stable at around $2 billion is the total contract value on an average. That's what I've seen in the last 4 quarters. Seems pretty stable in my view. Now comes the $1 million question that, Rahul, where is this IT sector going to go? Are we going to see a bull run in IT sector, or are we going to see more a consolidation or a downfall? Again, I'm not going to speculate what is likely to happen in the IT sector, but I want you to understand 2 important macro points. Really, really important. So please listen to this commentary for the next 2 to 3 minutes. First point is, have a look at my screen. You will see the location wise breakup in terms of the revenues of TCS, Infosys and HCL Tech. Again, I have picked up these 3 companies because they are the top leaders in IT sector. Please make sure that you're not taking any of these as recommendations. What you note here is that in North America, revenues contribution is around 47% in TCS, 57% for Infosys and 66% from HCL Tech coming from USA. Point to note here is that USA is driving almost 50 to 60% revenue contribution to Indian IT companies. Point number 2 you will note here is that in terms of the verticals, if you see, for TCS, banking and insurance sector is bringing around 30% revenues, while for Infosys, financial services is bringing around 27%, and while for HCL Tech, it is also bringing 21% of their revenues from financial services. So financial services, banking and insurance is the number 1 sector that is contributing the most revenues for the top 3 companies in IT sector. What does this tell you? That if the financial services sector in US improves and we start to see some transformational deals coming in from that particular geography and the sector, then Indian IT companies are going to perform like anything. But how do we know that the banking and financial sector is going to do much better in US or not in the coming quarters? For that, have a look at these 2 macros. Number 1 is Donald Trump's victory in US, right? Donald Trump does not like regulations. He more like a free economy, sort of a less of regulations on bank, more like a free economy, less harsh oversight. What does this mean? Typically, this means that banking sector is going to be less regulated. Therefore, they are likely to spend more money. Therefore, new projects might start to come into IT sector in the next 4 to 6 quarters. The second macro that we need to understand is the Fed rate cut cycle that is started in the last couple of months. And don't believe me what I am saying. Have a look at what the commentary the TCS and the Infosys management is saying about the rate cut. This is the exact word by word commentary given by the TCS management on the US Fed rate cuts that are coming up. So what they're saying here is that whenever US Fed cuts the rates, then typically what happens is that improved investment in IT sector, operational efficiency is what customers look for. So overall, from their perspective, it does help IT sector. If I talk about what Salil Parekh is saying from Infosys, he's again saying that typically banks start to spend money in the large technology programs when the rate cut happens because they have more money to spend on. So what it will appear to be that in the next 4 to 6 quarters, because of Trump's victory and the rate cut cycles, depending on how the rate cuts actually happen in the next 4 to 6 quarters, what is likely to happen is that the IT sector is likely to see positive movement. The sentiments are positive right now. So this is in terms of the short-term view, but if you look at little longer, maybe 5 years view, have a look at what Gartner is saying. They are saying that in the next 5 years, global IT spend is likely to grow at 9.6% CAGR. This is not like 1 to 2%. It is almost 10% of CAGR growth is what is likely to be there as per Gartner. Okay, Rahul, in that case, it looks good. Shall we go and buy IT stocks or IT index? Again, not a recommendation for you to do any buying, selling here, but please also understand the game of valuation here. My last point about this video. Have a look at my screen. You will see the Nifty IT PE ratio right now is 34.3 at the time of recording this video on 26th of November. What you see here is that this valuation is right now on the higher side. If you look at the last 1 month valuation, 3 month valuation, 6 month, 1 year, 2 year, it is pretty much on the higher side of the valuation. So one argument here could be that a lot of buying in IT has already happened because the information I have presented to you is all out there in public. Investors might have already started buying IT stocks. So much of that buying might have already happened. So in my view, you really need to show caution and look at IT sector as buy on dips rather than simply going and buying everything that you see in IT sector. I hope this viewpoint is very, very clear. Nothing in equity investing is risk-free. Of course, please do not take any of the names or the IT index here as recommendations. I've given you some data-backed analysis that may help you to learn more about equity investing. And if you like this video, hit the like button. Also, you can consider subscribing to my YouTube member community if you like some insights on almost daily basis practically from stock market. The link to join my community is in the description or in the pinned comments, or simply go to my channel and press on join button. I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.